Hi there, back again with me, Rati in Mami Beluga Investing. This video is a part of Singapore Straits Times Index where I discuss STI constituents. Today I'm discussing Dairy Farm or Dairy Farm International Holdings Limited with stock symbol D012. Okay, my quick takes for this company are: firstly, it is currently in the midst of a multi-year transformation. But considering the challenging global situation and entrance of new players, it seems to be a very difficult transformation. Two, I haven't seen any positive results of their transformation in terms of profitability, but I have seen their physical store transformations. Three, for now, I don't have any plan in making any positions in Dairy Farm. So, how did I come up with the above conclusion? Stay tuned. And don't forget to subscribe to get more of the same kind of contents. Okay, disclaimer. This is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. This video shouldn't replace any financial advice and neither suggestion to take up position, buy or sell in the stock market. Please conduct your own research before making any decision. Feel free to put your comments, criticisms and suggestions in the comment sections below. Okay, now let's have a quick look at the company's profile. Okay, Dairy Farm is a leading Pan-Asian retailer. On the screen, we have Dairy Farm's Pan-Asian footprint. It is present in 12 Asian markets and territories: mainland China, Macau, Hong Kong, Taiwan, the Philippines, Vietnam, Thailand, Cambodia, then Malaysia, of course, Singapore, Indonesia, and then Brunei. The group operates grocery retail, convenience store, health and beauty, home furnishing, restaurants, and other retailing under well-known brands. As of the 31st of December 2020, the group and its associates and joint ventures operated almost 10,000 outlets and employed some 220,000 team members. The group total annual sales in 2020 exceeded 28 billion, which mostly coming from grocery retail, as we can see on the screen. The group provides quality and value to Asian consumers by offering leading brands, a compelling retail experience, and great services, all delivered through a strong store network supported by efficient supply chains. Dairy Farm International Holding Limited is incorporated in Bermuda and has a standard listing on the London Stock Exchange with secondary listing in Bermuda and Singapore. The group's businesses are managed from Hong Kong by Dairy Farm Management Services or Dairy Farm Management Services Limited, through its regional offices. Dairy Farm is a member of Jardine Matheson Group. Unfortunately, I couldn't find its latest shareholder composition from its 2020 annual report, but from an internet lookup, I discovered that Jardine Strategic Holdings held 78% of the company's stock. Since the information doesn't come from the annual report itself, I cannot fully vouch for it. Okay, that was a brief company's profile. Now let's continue with the company's performance. We start from the company's EPS history. So here on the screen, I plot Dairy Farm earnings per share, or in short EPS, from 2009 to 2020. I also added horizontal green dash line as a guide to zero level. Any earnings below this line indicates that the company is recording a loss for that particular year. At a glance, we can see on the screen that Dairy Farm profit has never been in decline over the last 10 years. Has never been in minus or negative for the last 10 years. A notable sharp drop in their earnings happened in 2018 from their 2018 annual report. They attributed the earnings drop to business and management restructuring cost. In 2018, Dairy Farm conducted detailed strategic review of their Southeast Asian food. They concluded that their Southeast Asian food business was a viable business, so change must be made. The change had incurred a significant cost to asset, giant business, and store leases. This charge recorded as non-trading charges of about 332 million US dollars, which about 50 million US dollars in the form of cash. Okay, if I recall, there were a few giant stores closed during that period. I also noticed that a few of the remaining stores have their layout simplified and revamped. In 2019, dairy farm earnings was improved, but it still followed the previous year's downward trend. According to their annual report, sales were 14% lower in 2019 compared to 2018. One of the primary reasons is due to social unrest in Hong Kong, which is in turn impacting dairy farm operation in the second half of 2019. Okay, finally, there was a further drop in 2020, which was attributed to the pandemic. The company is still in its transformation mode, though. Okay, I get the feeling that Dairy Farm is missing its key opportunity in the e-commerce field. Why? Because what I can see, at least, according to my observation, it hasn't making any aggressive move into grocery delivery, at least in Singapore, which is particularly in demand during the lockdown and perhaps years to come if the virus becomes endemic. I would expect Giant to be more aggressive in getting customers like its competitors, for example, NTUC, FairPrice, Redmart, Sheng and Amazon in Singapore. So that was the company's profitability. Now let's look at the perks of becoming the shareholder. Let's look at the dividend history. Okay, to see the sensibility of dividend payout, so here I plotted 3 layers of information. First, the dividend payout over the last 12 years with red round markers and connected with a thick red line. On each of the points I have annotated with 2 numbers. The number above the markers are the dividend payout in US dollars and the one below is payout ratio to the earning per share that year. As a comparison to the earnings, here I plot back the earning as a thinner red line on the screen. Okay, at a glance, there are several things in the dividend payout that make me rather uncomfortable with Dairy Farm. Okay, the first one is in the period of 2008 to 2015. There was a general trend of steep dividend payouts increase, which wasn't aligned with its earning. The next thing that made me uncomfortable, borderline to worry, is that dividend payout from 2018 to 2020, where the earnings decreased faster than the dividend payout reduction. 2018 earnings dropped significantly, but the dividend payout didn't follow. We can reason that earning drops in 2018 is mostly non-cash, since this was due to business and management restructuring cost, but I still don't think it was wise enough to maintain such a high dividend, considering the company's earnings. Okay, in 2019 and 2020, most of the company's earnings were distributed as dividends, which is, for me, quite worrying. I don't think such a high payout would be prudent, considering that the company is in the midst of a multi-year transformation. During this period, like it or not, earnings could be impacted and the company would need all leverage that they can muster. So any extra cash should be retained, if possible. Okay, up to this point, I don't feel comfortable to make any position in Dairy Farm. Okay, that's it. Now let's take a look at the market's valuation. Who knows, it can change my mind. Okay, to see the market's valuation of Dairy Farm, here I plotted 4 layers of information, which are: the first one is the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can just use the search term dairy farm share price and it will pop me with this graph. But price alone is sometimes misleading for the value of the company and its prospects. So I'll include some fundamental indicators to help me to decide. The second layer of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where price to earnings, that is the PE ratio, is at number 10. Okay, for me, I consider 10 times earning multiply has two purposes. The first one, that it indicates that the price where I have higher chance to break even within 10 years. You could plot 5 times earning multiply if you want, if your investment horizon is 5 years. Okay, secondly, as a consequence for the first reason, I'll consider share price above this 10 earning multiply to be expensive, at least for me. Okay, the third layer of information is 15 times earning multiply. With the same principle as 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crossed this line, particularly for non-growth company. Okay, the fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I would consider the share price to be super expensive if it ever crossed this line. For non-growth company, I consider to cut down my position if this happened. Okay, so now let's get back to the main question. Is dairy farm still cheap enough for me to change my mind? At its current price, it is not cheap at all. How did I come up to that? Well, with the current earnings, the reasonable price to me is less than $2 per share, or 2.65 Singapore dollars per share. As of 16th of June, as we can see on the screen, when I prepared this video, dairy farm share price is hovering around 4.27 US dollars, or around 5.67 Singapore dollars, which is much higher than 20 times earnings multiplied based on its 2020 annual earnings. At that price, I consider that the share price to be very expensive. Going a little further, did dairy farm ever trade it at their value? Well, it happened before 2010, as we can see on the screen. From 2009 to 2013, dairy farm share price climbed steadily, though as we can see in the chart that its earnings were not that great. The share price then decreased year after year from 2013 to 2016 till it touched a more reasonable valuation, that is the 15 earnings multiply at around $5 at that time. Okay, similar trend happened again since 2016 to 2019. That price rallied, though companies' earnings didn't improve. Probably a new bullish trend emerged as the market became excited of the company's ongoing transformation. They expect that the company's earnings will increase, so people keep buying the stock, possibly. Yet again, without fundamental backing, share price dropped again since 2019 till today at the making of this video. So my verdicts for dairy farm are: first, at the current stage of the company, I'm not comfortable to make any position, at least direct position. As I probably mentioned in the previous videos, I have made some indirect positions through ETF. If I have to value the company for a reasonable price, I will put my price less than $2 per share, or 2.7 Singapore dollars. That might provide sufficient buffer for any downtrend. As the making of this video, the share price hover around 4.27 US dollars or around 5.67 Singapore dollars per share. So that's a long way to go. 3. I might change my mind if I can see some tangible results of the company's transformation that may lead to improve in earnings. Okay, that's all my video for Dairy Farm. Please subscribe to my channel. It means a lot for me. I hope my analysis is useful, and I'll see you again in the next video. Bye.